So let's look at it. With interest rates remaining at a 12-year high, there's been a sharp decline in the general activity seen on the Jamaica Stock Exchange. Like the trading is just, people just not trading as buyers are retreating and sellers are seeking cash. So tell us more about this. What's going on, Greg?
Well, the PM and yourself touched on it very well at the beginning of the interview. You have inflation, right? You have inflation that's affecting the disposable income of many persons, which invariably leads them to make decisions. You spoke about the supermarket and school fees, which, of course, that's the reality of many persons. No, many persons that do invest. So because of that, I mean, disposable income is tighter. Persons naturally have to make decisions about what they spend their money on, which may mean in some instances, there's less money to invest, or they may have to divert from investing to using their investments to supplement their consumption. This is not natural just for us. I mean, in the States, I read a report where US persons are blowing through their pandemic savings, and they're also facing an inflation problem. So that's one of the aspects of why you may see lower trading overall. Let's not forget that interest rates, as you mentioned, they're at a 12-year high. What does that mean for investors? It doesn't just mean, okay, you walk in, you get a higher rate on your certificate or deposit, or you buy a CD at a higher rate, or treasury bills. Of course, yes, fixed income securities have become more attractive because of those interest rates. But on the flip side, if you're a borrower, if you have a mortgage, if you have a car loan, you're now having to pay, in many cases, more to keep those items, right? And of course, if you say to somebody, well, you have a choice, is it that you pay your mortgage, or is it that you invest? If they don't have the income, then naturally most persons might say, well, I can't lose the roof over my head. That's probably their biggest safety net is their house. So it's not unexpected to see that there's an impact on trading. And I mean, anybody that's done Finance 101, there's a basic relationship between markets where they say when interest rates are high, equities tend to fall off. And when interest rates are low, which is what we saw going up through COVID, and the market was supported, the markets tend to perform very better. But it's been a very difficult time for the markets. If we look at where we were, say, December 2019 on the combined index to where we are now, you're looking at about a 30% decline, which it could be worse. It really could be worse. But keeping the general context of what we're seeing in mind, and how investors are being impacted, it's really an expected outcome as far as I see it.
But are investors right to be concerned and wary and cautious at this time? Or should they, hold strain and know that the market has cycles? Sometimes it's up, sometimes it's down.
Yeah, certainly. Warren Buffett always says, when others are fearful, be greedy. When others are greedy, be fearful. And I do believe in that. But it comes down to, do you have the resources? So on the market, no, there is an opportunity. There are stocks on the market that are trading at valuations that would have been unheard of in the last 2-3 years. I'm talking low single digits for some of the main market companies. Even some of the junior market companies have come down significantly, and these are companies that supposedly have a lot of growth ahead of them. So, if you invested in the market, some persons may have been a bit wary because they may have seen the value of their portfolio take a significant hit. And, the psychology of that is you start to feel discouraged. You start to feel like, well, this doesn't make any sense and I'm not going to do anything more. But it's very important for persons to stay invested because, as you said, Khalid, it's a cycle. It's not going to last forever. Interest rates will, at some point, normal. Well, I don't want to say normalize, but their interest rate environment will become better. As the PM said, I mean, the country is growing, so that's a positive. So there is potential for a lot of these companies that may have not been doing as well to see a nice rebound. So definitely, I'm not a gloom and doom person. I mean, yes, there is risk, and it's all about risk management. So going back to what I said a while ago, it's about your resources. Now, for the persons that may not necessarily have a choice and they have to maybe liquidate their portfolio to meet obligations, that's unfortunate, but that's reality. That's reality. And you just have to plan around how you get back on track in terms of managing your budget to ensure that you leave yourself enough room to invest. Because ultimately, if you want to create wealth, you're gonna do it through investing, which is stock market, real estate, fixed income, whatever your appetite may be. You speak to your financial advisor, but it doesn't happen if you're not invested. So certainly you want to keep your funds in the market. And if you need to make some adjustments, you make some adjustments. But certainly it's not going to last. What's happening now is not going to last forever.
So Philip has the question of the year on that point. He said it's not going to last forever, but how long? When will we see the turnaround? That's the thing. If we have to hold strain,
Okay.
how long do we have to hold strain from? And if history repeats itself, what does history tell us about how long we may have to continue bearing these
I mean,
conditions?
that's a good question. I mean, everybody gets asked that question, right? In the sector, the economists are asked, when are things going to improve? And some persons will say, well, we expect interest rates to decrease or start to turn. I mean, at first we would have heard in December, but then because things are happening in this overseas in terms of the US Fed looking to increase rates, that might hold the hand of the central bank locally to push rates down. So it's now moved from December to maybe the first quarter next year. So I mean, I do think that, if you look at it positively, right, we are starting to see transactions come into the market, like IPOs. We had our first junior market IPO for One Great Studio in August. There's a APO out now. So those transactions kind of give you a peek in terms of what is the investor psyche and sentiment saying. I can't say when exactly it will turn around because the market doesn't necessarily always seem to even respond to positive fundamental news, right? So I think when the environment improves is largely when we start to see a loosening of monetary policy. Maybe interest rates start to come down. Some persons get a reprieve, and the general availability of money starts to flow into the market, which is what the central bank is trying to control. If we look at other markets globally, typically they perform best when monetary policy tends to be loose. So, I mean, I would typically say that I would expect something similar here, because if you think about it, if the news is tight around persons' necks, their capacity to respond to go into the market will be limited. So I mean, I can't give you a date. I mean, I hear first quarter next year, second quarter next year, but I mean, I'm not a central banker. I'm not
or a psychic.
or a psychic, but what I will say is that don't wait till the market turn around. I mean, if you can make a general assessment as to something that you may have liked that looks good, they're consistently performing or improving their performance, and the price isn't moving, then it may be an opportunity for you. It may be an opportunity for you to take advantage of it, because once it turns, and it starts to move, you might find yourself on the outside not able to get in. So that's what I would say.
Now, you mentioned the 1GS IPO, and
Yeah.
the basis of allotment was announced yesterday evening. Investors are getting the first 20,000 shares that they applied for, plus 34% of the balance that's in the general public pool. What do those numbers tell you about the investment appetite right now, especially for IPOs?
I think it was reasonable. It was the 34% was a bit similar to the previous IPO, which was IPCL, although 1GS did give an additional 10,000. I think most persons were thinking they would get a minimum of 10,000 plus a percentage, but you got 20,000 plus a percentage. So, but what it tells me is that look, there's still an interest in IPOs, albeit it's not maybe to the magnitude of what you would have seen in early 2021. But
Right.
these were fairly large junior market IPOs, right? They were fairly large junior market IPOs, meaning they were more like 400 million thereabouts. When some of the IPOs late last year and early last year were like 100 mil or less. So the bar to move to have a small allocation would be much easier. But it does show that there's an interest, right? And I think that given this first one is through, and it will be listed in short order, there'll be others will come. It's just a matter of time. So I don't think that the market capacity is what it is in 2021 to what it is now, because when you look at the key metrics, if you look at trade value between the same period up to the end of August 2023 compared to 2022, it's down like almost 60%. The number of transactions are down, I think, around 50%. So those are significant numbers you can't ignore, but there is still an appetite, which is important. I remember the days when IPOs never had to be fully subscribed. When IPOs would be under subscribed, I've seen where IPOs have not raised the minimum amount and had to be canceled. You don't
Wow.
want to go back to those days, right? So we're still so when I see it now and I'm looking at it through that lens, the fact that there's still an appetite in my mind is good, because it's a tough environment. It's a very
Yeah.
difficult environment.
And even in this tough environment, still being oversubscribed,
Yeah.
coming from, the
Give
days that,
thanks for
that you
small
remember.
mercies, because it there were worse times, right? The market has seen worse times, and I've been in a market where interest rates were much higher than where they were now, and it was significantly different. So I remain positive. I mean, it's a cycle for those that have the risk appetite. Hey, I mean, go shopping. There are
Hmm.
some deals out there. So certainly, get your pencil and your paper, and you're working out and make your decisions, right?
I remember when single digit interest rates were a dream. Oh, you had
Yeah.
Audley Shaw. This was around the time when I first started working in Jamaica, and we are covering Audley Shaw was Minister of Finance at the time under Bruce Golding, and
Mm.
his constant vision and demand and call was for
Was low
single digit
interest
interest
rates.
rates.
Yeah. And we
And
got
now
it.
I remember that so well, because every single function he would speak at, he would speak about we need to move towards single digit interest rates. Right now, we're saying interest rates are high, but they're still generally single digits.
Yeah, they're still below JDX levels. So certainly when you lower interest rates and you create an environment where funding costs are low, then changing it in a short space of time, because I mean the central bank did increase pretty aggressively because they wanted to get ahead of the US Fed. That's gonna cause a bit of a knee jerk. But relatively speaking, I mean, we're not back in the days of 25%, and the prime minister spoke to it when we had to pay a cost to actually maintain the value of our currency. That was 25-30% interest rates. We actually saw a revaluing dollar last year. So the dollar revalued, I think, by 2%. So the environment isn't bad, but it's necessary, because if you don't control inflation, then the situation gets much worse in terms of persons' affordability and how they live their daily lives. So
Yeah.
we're obviously saying that we understand it has to be maintained, but it's not. It could be worse. It could be a lot worse.
I'm going to take this final question from Pablo. Poplar says the JSE has almost no correlation to the real Jamaican economy. Public participation is so low, it has almost no impact on the ordinary Jamaican. When will this change?
Good question. It will change when more people invest. And I mean, we still are at a very low penetration point for persons to invest in the market. And what you'll find is that when you have a deeper, a wider market, then it may be a little bit more reflective of the reality of the country. But the country has been on I'd say, a generally positive trajectory, and our market has been on a positive trajectory if you look over the medium to long term. But of course, what's happening with interest rates, which is not unique to us, that will likely have it is having a negative impact here and in other places too. So if we get a deeper market, if more persons invest in the market, then I think the dynamic of it will actually shift when persons start to take advantage of the opportunities to build wealth through the JSE.
All right. Well, thank you so much for joining me this evening, Greig. Riding solo, but some great points. Thanks again.